Hello, everybody. So we've had a brutal crash today for growth and for Bitcoin-related assets. What a brutal crash, and perhaps for no reason. That's the point, at least, I'm going to try to make in this video. All top assets have crashed. HIMS crashed. HIMS had some of the best earnings out there. I was so pleased. Earnings were well above expectation for HIMS. It crashed. Tesla crashed. We don't know why. Nvidia crashed on valuation fears. So let's begin with Nvidia. And of course, we'll talk about what's happening to Bitcoin. This is a complete mess. Absolutely brutal for growth stocks. And of course, my portfolio is much more impacted than other portfolios because I own exclusively small cap, high growth stocks and like Bitcoin related stocks. So for me, it was a really bad day. Now, what is CNBC telling us the crash came from? CNBC thinks it's because of a Palantir earnings. Palantir dropped 8%, and so other assets in courtesy dropped way more, especially in the crypto space. Palantir is a leading company. Yes, it's an expensive company, but they are firing on all cylinders. And even though I do agree that Palantir is too expensive, I definitely don't agree on that with Nvidia. I absolutely don't agree with Nvidia. Nvidia the market is selling off because they see $5 trillion, or in this case, $4.8 trillion, and they say, oh, it's too expensive. Oh, it's a lot of money. It's actually roughly the cheapest Max 7 stocks in my spreadsheet, and I'm only assuming 63% growth. If the growth is actually what Jensen said at GTC 5 days ago, at GTC on stage, if you watch that keynote, he said, we're going to have $500 billion in sales over the next 5 quarters, okay? The revenue trailing 12 months right now is $165 billion. So you're looking at a company that could have 200% revenue growth, which means that it could be a 0.2 on EV over GP over RG. And like Nvidia is not expensive. It is a cheap stock. These fears, in my view, are entirely unwarranted. AI is not a bubble. AI is real. AI is as revolutionary as oil or electricity. I don't think it's a bubble. We are nowhere near a bubble. And yeah, Palantir may be a little bit in a bubble territory. But that's not enough to extrapolate to the whole market. Like, it's not the situation of the whole market. It could be the situation of just one stock. The rest of the market did not have to fall in unison with Palantir. It's entirely silly. I do not understand it. This is clearly an opportunity if you have dry powder. But we've been having a lot of opportunities in October already, right? So-called October. I'm fearful we're gonna get even better opportunities for Moonvember, if I may be facetious like that. But anyways, let's talk about Bitcoin. I highly recommend Marty Party. Don't recommend a lot of YouTube channels, but I recommend Marty Party. You can follow the liquidations. You can just play that on your screen, and I play it on a big screen. I'm a long-term holder. I don't trade, but it's important to know where we're headed, right? And so the liquidations have just been to the downside. What are these liquidations? It's people on platforms like Hyperliquid, on Aster, or platforms like that. They put $100. They want 200x leverage, so they want to make $20,000. They want to make $20K off of $100, and so they take unreasonable leverage, and of course the goal of market makers is to liquidate them entirely, to have them lose the entire position. Now, if you follow Marty Party, we've removed 1.3 billion of liquidation today. Off of the top of my head, that's probably like the second biggest liquidation in history after that awful Friday 2 weeks ago. 1.3 billion, that's probably the second worst in history here in the history of crypto. Marty Party telling us there's 18.5 billion of long to the upside. You see all of these lines right there are shorts that will be liquidated when we go long and when we go up, when the price of Bitcoin go up. Now, right now, the price of Bitcoin is not going up because everybody's fearful. A lot of long-term holders are selling, and there's no buy wall. And perhaps that Friday crash 2 weeks ago didn't help because a lot of people, entire portfolios got wiped out. You had people who committed suicide on that Friday because of the $19 billion wipeout or something like in a single day. So there's no buy wall right now, because there's no liquidity in the system. That's the big issue. There is no liquidity in the system. And if you follow kind of the shenanigans going on at the Fed, from my understanding, it's essentially a bunch of paychecks who were supposed to go out to banks, millions of paychecks who were supposed to go out on November did not go out. And so since those paychecks didn't go out, the banks started having liquidity issues such that you had the reverse repo activated and the Fed wired over $20 billion in the directions of banks yesterday. So there's liquidity in the system. There's liquidity issues in the system because paychecks have not made their way to millions of accounts. And so think about that. That is enough to make the banking system tremble. And that is enough for, of course, very highly quote-unquote risk-on assets to sell off. That's the explanation for what's going on in my view. For liquidity, when you have liquidity issues, you're going to sell off the high flyers. You're going to sell off the high-octane, highly liquid stocks. And what are those high-octane, highly liquid assets? It's things like Bitcoin, things like strategy, and also likely things like Tesla or Nvidia, which, in my view, had no reason to fall today. They're totally unrelated to them. No news related to them. Anyways, let's talk about strategy. Oh, I know my followers are not gonna like me saying that, but if you try to not be emotional, you would actually notice that strategy fell less than it should have. Strategy is actually down roughly 7% if you look at the after hours mark. And Bitcoin is down 5.5 plus nearly another percent. So Bitcoin is down like 6.5% when strategy is down like 7%. So make no mistake, on a day like this, strategy should have been down 9% or 10%. It was not. And in fact, when you go to the strategy dashboard, the MNAV rebounded today. So if you just look at the stock price, well, that doesn't work. You got to look at the stock price in relation to the price of Bitcoin. The stock price is a ratio of the price to Bitcoin, and that ratio moved up today. May I remind everybody, Bitcoin is at 99,000 right now, 99,400 as I record this. So strategy can't do well if Bitcoin doesn't do well. But we've had such bullish fundamental news on strategy. So yesterday we had Stream, 400 million likely they're going to raise in Europe with Stream launched on the Luxembourg Stock Exchange, available through Europe. That's going to be a hit if you ask me, and that's why they have a quote-unquote pre-sale, I'm going to call it, or a pre-IPO number at like 380 million or something like that. That's going to be thousands of Bitcoin that Saylor's going to be able to acquire, and I bet you he's very happy about the $99,000 Bitcoin. But more importantly today, we had the biggest deal. And this is going to require a dedicated video, hopefully tomorrow. But we had the biggest deal happen for MSTR, which is we finally crossed the $100 mark on Stretch. And as soon as we did, why do you think it dropped? Well, in my opinion, it dropped because Saylor unleashed the ATM. We knew that as soon as Stretch was going to trade at 100.01, he was going to unleash the ATM. Have we activated the stable coin, the Bitcoin, right? The $100 stable coin that Stretch is aiming to be? Have we activated it today? I think we have, because we went up. You can see he let the stock run up 3 cents above 100, and then you ATM to take it down, and you ATM to take it down. And of course, the vision of the future of this endless money spigot, this endless ATM, is the idea that as you reach a few pennies above 100, boom, you ATM 1,000 shares here, 1,000 shares there to always keep it trading at like 99.8 or 99.9, and then it spikes up and you take it back to 99.9 or something, taking the volatility of this instrument down to something like 1%. I think Saylor achieved a major unlock for this, and the fact that it's not trading with Bitcoin is absolutely impressive. The preferreds are behaving in a very beautiful way. I could not be more pleased. Now let's talk about HIMS. HIMS is another channel favorite. How in the world is HIMS down 5% today? Probably because the market said small cap bad and just sold off the small cap. The Q3 was nothing short of amazing. Don't forget there's a big product reveal next week. But the CEO essentially presented a proper game plan, in my view, to steal the cash cow from the entire health system, steal the cash cow from the mom and pop doctor. Everything that can be treated with a pill that you prescribe to somebody will probably be captured by players like HIMSS, and HIMSS is the biggest telehealth player. So they're 50% of a telehealth business. So they're going to capture 50% of this shift to digital pharmacies. And I mean, what they announced is so enormous, and they grew 50%, 49%. Their revenue growth is at 49% year over year. Like Q3, we beat Q1 in Q3. Like the awful quarter of Q2, which was none of their fault, is because Novo dropped them. That's why they had a bad Q2. Novo dropped them in the middle of a quarter. But I thought it would take them at least a quarter to recover. I was expecting a flat revenue between Q2 and Q3. So not only did we get an up revenue between Q2 and Q3 for HIMSS, but we got a Q3 higher than Q1, and that was without the GLP-1 partnership. Without that, like any other market, like if this had happened in the July market, we would have been up 30% on that news. Really, the only explanation I have is this liquidity thing going on with the banks, and the fact that millions of paychecks did not go out today, and the banks are feeling the stress. That's what I feel is happening. Like they talked about labs, entirely disrupting labs. That's a huge industry, talking about how they don't need to make money on labs because they pay for the labs via the prescriptions or the opportunity to prescribe that they're going to get when they see your labs. Like that's a really big deal. That's the same business model as not having to charge $200 to see a doctor, because it's the bundle, it's the cost of the medication who pays for the doctor. Well, guess what? The cost of the medication could also pay for the labs. Talk about cancer diagnosis. Talk about longevity. Talk about what's going on, the lobbying that's going on with the administration to approve peptides like BPC 157 or TB 500, which could be an enormous deal. We are at the dawn of a new era with peptides. GLP-1 peptides are just one of the many peptides we're rediscovering and discovering today. Part of proteinomics, part of protein science. Peptides are teeny tiny strands that are within proteins. Anyways, talk about testosterone and menopause, a successful launch. Weight loss is rebounding. Talking about how some people don't want to take prescriptions, so they could have pills. They have a lot of things going on, and this is the bigger one. They talked about the possible partnership with Novo coming back. Like 6 months ago, they would have talked about that. The stock would have bounced back. So I have no idea. I have no possible explanation for why this stock is down. This stock definitely, if you follow this stock, you know that the earnings definitely exceeded the market's expectation. And there's now a lot of people who follow HIMSS and were so pleasantly surprised by these earnings. It's this market over the short run, this market does not reward hard work. It's very unfortunate that we have to live in a world where it's the cost of the money supply that impacts everything. And in this case, where the government is so big that you get a delay in paychecks in the government, and then you have the whole system kind of like having a liquidity panic. Anyways, I'll finish with Tesla. Tesla today, again, was down. In my view, most of this drop was because of the indices, right? Sell the NASDAQ. And Tesla is a $1.3 trillion company, so Tesla is so big in the NASDAQ. Tesla is going to drop in unison with Nvidia and other stocks. Anyways, Tesla down 5%. And you have the news who's trying to have you believe that Tesla is down because of a pay package. Now, if you look at the odds, for example, this is the Kalshi odds. Kalshi odds that are at 93%. People are betting real money that it's 93% chance. And, a lot of the influencers, they tally the votes and they've come to the same conclusion. Like the compensation is very, very likely getting approved. And so you had this story every day. The pension fund of Norway is rejecting, etc. Well, 40 minutes ago, I guess it's now more than an hour ago, it was released that Schwab is going to be voting yes on the package. Is this going to be on the front page of the Wall Street Journal? Because the Schwab vote yes for the package, that definitely cancels out the Norway investment fund against. So is that going to make the headline? Right, you make the stock drop with your headline about and the Norway fund owns about 1% of Tesla. Like here you have Charles Schwab, which is a very big owner of Tesla shares via their customers and via their ETFs, and they're gonna vote yes. Is this going to be the headline? The answer to that is no, of course not. It's not going to be the headline because they only show you the negative stuff in the headline. This is a nothing burger. It's going to pass. No financial advice, but I think it's going to pass. I don't understand the market today. The nonsense is back. April is back, so welcome to the nonsense again. So we'll see if we get more deals towards the end of the week. Anyways, not investment advice on this channel ever. This was not investment advice, not financial advice. This is only entertainment. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.